State-owned Nigerian National Petroleum Company Limited, NNPCL, has withdrawn an earlier statement that it is in final stages of preparations for an initial public offering. Still, our deep dive looks at the potential gains and challenges from an NNPCL IPO as we await more clarity on the situation. Hello, welcome to Global Business Insights, where we look at the main business stories in a little more depth. Nigeria's oil law required NNPC to kick off the process of listing within 6 months after passing in 2021, but it had not done so. Several deadlines to kick off lapsed, and many were beginning to wonder if the IPO will actually happen. In February, Sonangol, another African state-owned oil company, said it was stepping up plans for the initial public offering of as much as 30% of its shares in a bold move to attract foreign investment and revitalize its economy. The experience of Sonangol was that it had to deal with the problem of subsidies first, which continued to weigh on the privatization process as it made the climate somewhat unconducive. Two major state oil companies going public almost at the same time could mean some competition. NNPC yesterday reversed its earlier position in a bold press statement that the long-awaited IPO is now taking off. That will have meant that the necessary preconditions are largely satisfied to anticipate a successful offering. Indeed, kicking off, completion, and achieving the objectives of the initial public offering are three completely different stages and processes with different success factors. Also, the context of higher interest rates for longer in the West, capital returning to developed economies for new investment and development priorities, and a broad risk aversion with activism against fossil fuels all imply that there are headwinds. Even though strong yields from emerging markets is gaining fresh investor attention with the ongoing market recalibration and all the uncertainty we are seeing in global markets. But let's discuss why the NNPCL IPO could have been a game changer. A successful IPO enables access to a large pool of capital from the public at reasonable cost, improving financial stability while at the same time giving positive visibility and credibility, potentially leading to increased brand recognition and trust of the organization. Employees and strong performers you want to retain can also be motivated with stock options or shares, which gives them a stake in the company and improves talent retention. Publicly traded shares tend to have much higher valuations than privately held ones, potentially leading to a higher market capitalization. And you also have potential for market consolidations like mergers and acquisitions, which can enhance synergies in the industry. Competitiveness can be improved, and you can get lower cost of operations, which of course could be passed on to consumers. Then going public, especially on international exchanges, requires major revamp in terms of corporate governance and reporting practices so that they meet higher regulatory requirements. It also delinks organizations like NNPCL from sometimes unproductive and toxic politics in operational decisions, appointments, and so on. Also, there is better liquidity for investors and founders and opportunities for significant long-term returns through dividends and appreciation of shares, as well as the opportunity to bring in committed technical partnerships with equity stake who will participate in the growth of the organization. Many will also point to challenges. Energy security and sensitivity related to social contributions could require the government to hold some stake, especially for stability in developing ecosystems. Once a company goes public, previous owners lose some control, and that could have huge implications in some environments. Also, many are unprepared for the increased scrutiny that comes with going public and the discipline in provision of timely and extensive financial and non-financial information and additional compliance requirements. For NNPCL, it makes sense to IPO in both a local and international exchange to get the credibility and full value and access to the capital it needs. Local exchanges may be too shallow given the growth potential, while international exchanges may impose IPO conditions perceived to be burdensome. Starting local and progressing to a international situation or international exchange in a staged approach is another way of going about it. At whichever stage in the IPO, transparency, process excellence, and winning trust of all stakeholders are very important success factors. The first stage of an IPO beauty parade to access and engage potential partners and advisors is of course important. We await clarity on the situation and believe an IPO does have the potential of unleashing a new level of positive possibilities in the Nigerian oil and gas space. It would also have been an opportunity for Nigeria to put its best foot forward in the global investment space instead of confusing the market. Some more business stories. The US economy grew at a 2.4% rate in Q4, according to the final estimate released yesterday. Growth was driven by consumer spending and was also slightly higher than the prior estimate. It was below the 3% average in the previous 2 quarters. Analysts expect the slowdown to continue to 1.6% in Q1 2025. We will get the first reading next month. US citizens filing new applications for unemployment insurance ticked lower to 224,000 for the week ending March 22. This print missed initial estimates and was slightly lower than the previous week's revised tally of 225,000. That was revised from 223,000. Moreover, continuing jobless claims went down by 25,000 to reach 1.856 million for the week ending March 15. A bit of good news there. Markets are reeling from the latest US auto tariff announcements. General Motors was down 7.36%, and there is the relief, though, that many cars imported from outside the US have US sourced parts in them. So instead of putting a 25% tariff on 100% of the car, the tariff might only apply to a much less value. But there is concern the US economy could slide into recession if new levies exacerbate already sticky inflation and dampen growth. Today, the February's Personal Consumption Expenditure Index, that's the Federal Reserve's preferred inflation gauge, will shed some clues on that, although we have to remember this is still a lagging indicator. Argentina wants a $20 billion loan from the International Monetary Fund as it struggles with adequacy of foreign reserves. In addition to the IMF request, Argentina, that's the IMF's biggest debtor by far, is also negotiating an additional package with other organizations such as the World Bank and Inter-American Development Bank, IDB. President Javier Milei has said the loans will in no way involve a further devaluation of its currency. In the UK, Sky is cutting about 7% of its workforce, that is about 2,000 jobs, as it replaces more of its traditional call center roles with online and artificial intelligence guided services. UK-based Sky is shutting down 3 of its 10 customer service sites in Stockport, Sheffield and Leeds, and scaling back others as it seeks greater efficiency in a labor-intensive division for the group. In the tech sector, CoreWeave is reducing the size of its US initial public offering and pricing its shares below the indicated range, a move seen as dampening expectations that the listing would boost investor appetite for IPOs. According to reports, the Nvidia-backed cloud services provider is now looking to sell 37.5 million shares, 23.5% less than originally planned, and price them at $40 a piece, which is well below even the low end of the previously indicated range. Yesterday, Moroccan telecoms operators Maroc Telecom and Inwi said they agreed to share their infrastructure in a joint investment to roll out a 5G network in the country. Both operators agreed to begin by investing 4.4 billion dirhams, that's $460 million over the next 3 years, according to a joint statement. And this they will do through two joint ventures in charge of deploying the 5G optic fiber and towers. The South African unit of MTN Group and American Low Earth Orbit LEO satellite provider Link Global said they had made Africa's first phone call via satellite a potential solution to providing coverage in underserved and rural areas. Mobile operators and smartphone makers are racing to deploy affordable satellite services to close gaps in network coverage. The United Kingdom retail sales print jumped 1% month-on-month in February after jumping 1.7% in January. Markets expected a 0.3% drop in the reported month. The core retail sales, stripping the automotive fuel sales, also rose by 1% month-on-month against the previous revised growth of 1.6%. The final estimate of UK fourth quarter GDP came in at 0.1% over the previous quarter. The March Tokyo Consumer Price Index was steady at up 2.9% as the Tokyo CPI ex fresh food and excluding energy as well also came in at 1.1% in March, slightly higher than a revised 0.8% in February. Also, Tokyo CPI ex fresh food rose 2.4% year-on-year in March against 2.2% expected. The Bank of Japan at its March monetary policy meeting noted that inflation is somewhat overshooting expectations. Nippon Steel and US Steel are still in talks to preserve their $14 billion merger. The Japanese steelmaker is offering billions more in investments into Rust Belt facilities, as we see Nippon increasing proposed investments to as much as $7 billion from the $2.7 billion previously offered to upgrade US plants. Moody's expects South Africa to have an orderly budget approval next month, that is, expecting the two main parties in the Government of National Unity, the ANC and DA, to come to a compromise deal before the budget vote next month. The ruling ANC is still seeking support for the budget, which includes a VAT hike. There have only been two such hikes in the last 30 years. Asia-Pacific markets were mostly lower and safe haven gold hit a record high as traders focused on higher US tariffs and remained shaken by all the trade uncertainty. Gold price climbs to a fresh all-time peak around the $3,080 region as analysts look to the United States Personal Consumption Expenditure Index, that's the inflation print coming out today, for more clues and direction. Well, that's all on this episode of Global Business Insights. Thanks for watching. Have a great weekend. This is Bode Oshosami. Bye-bye.